You can stand on the southernmost tip of Key West, Florida, look out at the ocean and almost see it. It is only 90 miles away. In the world of global logistics, 90 miles is nothing. It's a rounding error. It's a stone's throw. And yet, that 90-mile gap has been the single most tense, expensive, and dangerous stretch of water in the Western Hemisphere for over 60 years. We are talking, of course, about Cuba. When you see Cuba on the news, you usually see the same three things. You see old American cars from the 1950s held together with duct tape. You see crumbling colonial buildings, and you see political speeches. But that is not the real story of Cuba. If you look past the politics and the history books, and you look strictly at the balance sheet, you see something very different. You see a country sitting on billions of dollars of raw materials that the modern world is desperate for. You see a geographic location that could dominate shipping in the Americas. Cuba isn't just a poor island. It is a paused economy. It is a massive engine that has been turned off and left to rust right next to the world's biggest marketplace. To understand why your grocery bill is high, why electric vehicles are expensive, and why global superpowers are fighting over this tiny island, you have to ignore the ideology. You have to follow the money. So let's look at the map. If you were playing a strategy video game and you wanted to control the flow of goods into the United States, you wouldn't start by invading New York or California. You would take Cuba. Look where it sits. It is the cork in the bottle of the Gulf of Mexico. The United States has a massive river system, the Mississippi. That river is the economic artery of America. It's how farmers in the Midwest get their corn and soy to the rest of the world. It's how oil from Texas gets shipped out. Everything flowing out of the central United States has to exit through the Gulf of Mexico. To get out of the Gulf and into the Atlantic Ocean, ships have to pass through the Straits of Florida. That is the narrow lane of water between Florida and Cuba. Or they have to go south through the Yucatan Channel between Mexico and Cuba. Cuba controls both exits. For centuries, empires understood this. The Spanish Empire called Cuba the key to the New World. They knew that whoever held that island could choke off trade to North America. Fast forward to today. We live in a world entirely dependent on shipping containers. The Panama Canal, which sits just south of Cuba, is the most important shortcut on the planet. Ships coming from China, loaded with electronics, clothes, and machinery, pass through the Panama Canal and head north to the east coast of the U.S. To do that, they have to sail right past Cuba. In a normal world, Cuba would be the Singapore of the West. It would be a massive logistics hub where giant ships dock, refuel, and transfer cargo. It has the perfect deep water bays for it. But because of the political standoff, this potential is dead in the water. Ships have to bypass it. This adds time, it adds fuel costs, and ultimately, it adds to the price tag on the products you buy. But geography is just the wrapper. The real value is what is buried underground. We are moving into an age of technology that requires very specific, very rare metals. Everyone is talking about the green energy transition. Everyone is talking about electric vehicles or EVs. To build an EV, you need a battery. And to build a high-performance battery, you need two things: nickel and cobalt. This is where the story gets interesting. Cuba is ranked in the top 10 countries in the world for nickel reserves. Some estimates say they have the 5th largest reserves on the planet. But it's not just nickel. Sitting right next to that nickel is cobalt. Cobalt is incredibly rare. Most of it currently comes from the Democratic Republic of Congo, which is a difficult and often unethical place to do business. Manufacturers like Tesla, Apple, and Samsung are desperate to find stable sources of cobalt. Cuba has massive amounts of it. Specifically in the Moa Bay region, the dirt is rich with these metals. But extracting them is expensive and requires high-tech machinery. Because of the U.S. embargo and Cuba's lack of cash, they haven't been able to fully exploit this. Imagine if that market opened up. Suddenly, a massive supply of battery materials comes online just 90 miles from the U.S. auto factories in the south. The cost of batteries goes down. The cost of electric cars goes down. The reliance on supply chains in Africa or China decreases, but right now, that metal is mostly staying in the ground, or it is being slowly extracted by other countries that aren't the United States. Then, there is the energy sector. For a long time, people thought Cuba was energy poor. They rely on imported oil to keep the lights on, and often the lights go out. Blackouts are a daily reality for Cubans, but geology doesn't care about borders. The Gulf of Mexico is one of the most oil-rich basins in the world. The United States drills there. Mexico drills there. It stands to reason that the oil fields don't just stop at the maritime border. Geologists estimate that the North Cuba Basin, the waters off the northern coast, could hold upwards of 4.6 billion barrels of crude oil and almost 10 trillion cubic feet of natural gas. That is a staggering amount of energy. If developed, Cuba wouldn't just be energy independent, they would be an oil exporter. They could be a mini Norway in the Caribbean. So why aren't there oil rigs off the coast of Havana? Because deepwater drilling is the hardest, most expensive type of drilling there is. You need the best technology in the world to do it safely. And the countries with the best deepwater technology are the United States and its Western allies. Because of sanctions, U.S. oil majors like Exxon or Chevron cannot touch Cuba. They are legally banned from doing business there, so the oil sits there untapped. Other countries like Russia or China have tried to help, but deep water exploration is risky and capital intensive. Without the easy access to U.S. markets and tech, the math is hard to justify. So you have this paradox. You have an island suffering from blackouts, sitting on top of a sea of oil and gas. It's not just heavy industry, though. Let's talk about things you can actually see and taste. Before the modern era, Cuba was the sugar bowl of the world. Its climate is perfect for agriculture. Sugar, tobacco, coffee, tropical fruits. Today, Cuban agriculture is a disaster. They import up to 80% of their food. Productivity is low because they lack fertilizer, tractors, and modern irrigation. But the potential didn't disappear. The soil is still there. The climate hasn't changed. In a reintegrated economy, Cuba could be a massive food supplier to the United States. Think about the avocados, the citrus, the organic produce that Americans pay a premium for. Currently, the U.S. imports that from Mexico, Peru, or Chile. Cuba is closer than all of them. Transporting food is a race against the clock. The closer the farm, the fresher the food, and the lower the shipping cost. Reopening trade would mean lower grocery prices for basic goods in the eastern United States, simply due to the reduced cost of diesel to ship it. And finally, regarding resources, we have to talk about the brand. Cuban is a brand. Cuban cigars, Cuban rum, Cuban coffee. These are luxury goods. In the world of global finance, brand equity is a real asset. You can put a dollar figure on it. There is a massive pent-up demand in the largest consumer market in the world, the U.S., for these products. If the trade barriers fell tomorrow, billions of dollars in trade would flow instantly, not in years, but in weeks. So we have established that Cuba is a gold mine. It has the location, the minerals, the oil, and the soil. This begs the question, if this place is so valuable, why have we spent the last 60 years trying to strangle it economically? Why would the United States, a country that loves capitalism and trade, refuse to do business with a neighbor that has everything it needs? To understand that, we have to stop looking at the map and start looking at the history books. But we need to look at the history of money, not just the history of war. The story starts way before the Cuban Missile Crisis. It starts at the turn of the 20th century. In the 1950s, the relationship between the United States and Cuba wasn't just close. It was practically a marriage. But it was a marriage where one partner held all the credit cards. If you walked around Havana in 1957, it looked like a tropical extension of America. You could watch American movies, drive American Fords, and stay in hotels owned by American mobsters like Meyer Lansky. It was the playground for the rich and famous. But beneath the glamour of the casinos, the economic reality was stark. American corporations owned nearly everything that mattered on the island. They owned 90% of the cattle ranches. They owned the oil refineries. They owned the electric power grid and the telephone system. They owned 40% of the sugar production. Essentially, Cuba was a subsidiary of the U.S. economy. Profits made on the island didn't stay there. They flowed north to New York and Chicago. Then came 1959. Fidel Castro and his revolutionaries came down from the mountains and took over Havana. At first, the United States was cautious, but watching. They thought, okay, maybe we can work with this guy. But then Castro did the one thing you never do if you want to be friends with the United States. He messed with the money. In 1960, the Cuban government began nationalizing American property. In plain English, they took it. They took the oil refineries owned by Texaco and Exxon. They took the telephone lines owned by ITT. They seized the sugar mills and the banks. In total, they seized about $1.8 billion worth of American assets. Adjusted for inflation today, that is roughly $13 billion. It remains the largest uncompensated seizure of American property in history. This is the moment the relationship broke. It wasn't just about communism versus capitalism, it was about theft. The U.S. government responded with the embargo, a total ban on trade. The logic was simple. You took our stuff, so we will cut off your money. Your economy will collapse, and you'll come crawling back. But Cuba didn't crawl back. They found a new sponsor. The Soviet Union stepped in. They were happy to pay Cuba's bills just to have a foothold 90 miles from Florida. They bought Cuban sugar at inflated prices and gave them cheap oil in return. This cemented Cuba as an enemy of the U.S., leading to the nuclear missile crisis, which nearly ended the world. For 30 years, this was the status quo. The U.S. ignored Cuba, and the Soviet Union paid for everything. But then in 1991, the Soviet Union collapsed. Almost overnight, Cuba lost 80% of its trade. The tractors stopped running because there was no fuel. The lights went out. Cubans call this the special period. It was a time of extreme hunger and poverty. From a strategy perspective, this was the moment the United States had been waiting for. The corporate takeover should have happened then. The regime was weak, but the U.S. didn't lift the sanctions, they tightened them. The hope was to push the Cuban government over the edge into total collapse. But the collapse never happened. The government survived. They opened up tourism to Canadians and Europeans. They legalized the U.S. dollar. They limped along, which brings us to the missed opportunities of the modern era. For decades, U.S. policy has been stuck in a loop, but the world kept turning. While Washington refused to trade with Havana, other countries started looking at the map we discussed earlier. China looked at Cuba and didn't see a communist museum. They saw a logistics hub. Today, China is Cuba's largest trading partner. They are supplying the telecommunications equipment for the island's internet. They are upgrading the ports. Why? Because China is playing the long game. They know that if they control the infrastructure in the Caribbean, they have a strategic advantage right in America's backyard. Russia has returned too. They recently forgave massive amounts of old Cuban debt in exchange for new investment deals in energy and transport. Even American allies like Canada and Spain invest heavily in Cuban hotels and nickel mines. They are making money from the resources that U.S. companies are banned from touching. There was a brief moment where this almost changed. In 2014, under President Obama, the U.S. attempted to normalize relations. Embassies were reopened, direct flights started, Google and Airbnb started operating in Havana. The logic was, the embargo hasn't worked for 50 years. Let's try flooding them with capitalism instead. American businesses were salivating. Farmers were ready to sell grain. Tech companies were ready to wire the island. But it didn't last. The political winds shifted, and the sanctions snapped back into place. Then, the COVID-19 pandemic destroyed Cuba's tourism industry, plunging them into another economic crisis. So here's where we stand today. The United States has sanctioned a country that sits on its doorstep, effectively handing the keys over to its biggest global rivals, China and Russia. We are leaving billions of dollars of trade on the table, ignoring vast energy reserves, and complicating our own supply chains, all to fight a Cold War that ended 30 years ago. And you might be thinking, okay, that's geopolitical chess. I don't own a shipping company. I don't run an oil rig. Why does this matter to my bank account? It matters more than you think. Because when you choke off a supply line this big, the costs trickle down to everyone. Let's bring this home to your wallet. We live in a global economy that is obsessed with supply chains. When supply chains break, prices go up. We saw this during the pandemic. Right now, the global supply chain is fragile. Shipping costs are high. Energy is volatile. And inflation is eating away at savings. So, how would opening up Cuba actually change things for you? First, look at the gas pump and your electric bill. Remember the oil and gas reserves in the North Cuba Basin? If American companies were allowed to develop those fields, we would see an influx of energy supply right next to the refineries in Texas and Louisiana. Basic economics. When supply goes up, prices tend to stabilize or drop. It wouldn't happen overnight, but more regional oil means less reliance on oil from the Middle East or Russia. It means energy security. And energy security means price stability for the fuel you put in your car and the gas that heats your home. Second, consider the green premium on everything you buy. Electric vehicles, laptops, iPhones, anything with a battery. Right now, these are expensive, partly because the raw materials are hard to get. We are shipping cobalt from Africa to China for processing, then to factories around the world. It is inefficient and expensive. If we could access the nickel and cobalt reserves in Cuba, 90 miles away, the cost of production for batteries drops. If the cost of building an EV battery drops by 20%, the sticker price of the car drops. That makes the technology affordable for millions more people. It's not just about saving the planet, it's about saving money on your next car purchase. Third, think about food prices. If you live in the eastern United States, a lot of your winter produce comes from far away. Transport costs are a huge chunk of the price of an avocado or a bag of sugar. Opening trade with Cuba creates a massive new source of food close to home. Competition drives prices down. If American farmers can sell grain to Cuba, a new market, and buy produce from Cuba, a new supplier, the efficiency gains lower the cost at the checkout line. And finally, let's talk about investment and jobs. When a market of 11 million people suddenly opens up, it creates a boom. We are talking about needing to rebuild an entire country's infrastructure. Who builds the roads? Who upgrades the internet? Who sells the tractors? American companies, Caterpillar, John Deere, Google, AT&T, American Airlines. If these companies have access to a new market, their stock value goes up. If you have a 401k or an index fund, you benefit from that growth. Furthermore, the ports in Florida, Louisiana, and Texas would see a massive surge in activity. That means jobs, dock workers, logistics managers, truck drivers. The port of Mariel in Cuba could become a transshipment hub that feeds directly into U.S. ports, making the whole system faster and cheaper. So this isn't charity, it's business. By keeping the door closed, the U.S. is essentially forcing Cuba to be poor, but it is also denying its own citizens cheaper goods, better energy security, and investment growth. We are paying a political tax to keep the embargo going. Of course, it's complicated. The Cuban government is still an authoritarian regime. There are real human rights concerns. There are unresolved legal claims about that stolen property from the 1960s. Those are serious issues that can't be waved away. But from a strictly economic perspective, the current situation is a lose-lose. The U.S. loses access to resources. Cuba loses access to prosperity. And rivals like China gain a strategic fortress in the Caribbean. In the end, Cuba is a reminder that geography is destiny. But policy is a choice. The island isn't going anywhere. The nickel, the oil, and the deep water ports will always be there. The only question is, who will unlock them? Will it be the United States reintegrating a neighbor and lowering costs for its own people? Or will we continue to watch from across the Florida Straits as other superpowers set up shop in our backyard? Cuba isn't a poor country. It's a paused economy, sitting next to the world's biggest market. And sooner or later, someone is going to hit play.